I do not think the average person can pick stocks.
Hey guys, Coach Julien here. Today I wanted to share with you a little video extract of Warren Buffett, renowned and known as one of the most successful investors in the world. In this clip, he says straight out how the average person should invest. And believe it or not, he doesn't even recommend his own fund, his own company called Berkshire Hathaway. Hi, I'm Coach Julien, and my purpose is to explain saving and investing in simple terms so that pretty much anyone can start anytime and be well on their way to financial freedom. If you like the video, you know what to do. Hit that like button and subscribe to my channel. Don't forget to hit that bell button to be notified whenever I upload new content. The reason I want to share this is because it's an example of how investing doesn't need to be so complicated, and how regular folks can have a good chance to grow their money without busting their brains trying to pick out the right stock and also worry about when to buy or sell them. So this strategy could be used by pretty much anyone, and I kind of wish that I knew this 30 years ago. So during the last annual shareholder meeting of Berkshire Hathaway in May 2021, the reporter Becky Quick asked Buffett what he thinks about index investing. And listen to Mr. Buffett's response.
I recommend the S&P 500 index fund, and have for a long time to people. And I've never recommended Berkshire to anybody. I like Berkshire, but I think that a person who doesn't know anything about stocks at all and doesn't have any special feelings about Berkshire, I think they ought to buy the S&P 500 index.
For those who don't know, index investing is basically buying an investment that follows an index like the S&P 500, the New York Stock Exchange, or the Toronto Stock Exchange. An easy and cheap way to invest in indexes is through ETFs, also known as exchange-traded funds. Here are recommendations as to the kind of investments you can make that follow the S&P 500. And I'm going to give you 3 today, okay? And I've talked about these in my previous videos. So the 3 investments that I'm going to show you today, there's one, it's a US dollar investment, and 2 that are in Canadian dollars. VOO is a giant ETF. It has over $280 billion of assets under management with an expense ratio that is almost at 0. It's really a 0.03%, super low. It offers a little bit of a dividend yield, 1.32. If you're young and you're not planning to use your funds yet, make sure to reinvest that dividend. So you call your bank and you tell them, look, I'd like to invest the dividends of my ETF here automatically under a dividend reinvestment program. You want your money to generate more money. You're going to really fully take advantage of the compound effect when you reinvest the dividend automatically. It doesn't cost anything to enroll in a DRIP. So take advantage of that. I have videos that talk about that. I'm going to flash them on the top right of your screen. Take a look at those videos if you want more information on DRIPs. The next one is ZSP.to, BMO S&P 500 ETF. You can invest in Canadian dollars. So it's basically, you don't have to exchange all your money into US dollars to take advantage of the S&P 500. You could actually use Canadian dollars. So ZSP.to is an excellent one. Almost $14 billion of assets under management. The expense ratio is a little higher, 0.09. That tends to go with the volume of assets under management. The less assets under management, the more the expense ratio, but it's still very low, a fraction of what a portfolio manager is going to cost you or what a mutual fund is going to cost you. The dividend yield here too, so again, reinvest that. Finally, there's the XSP.to, which is an iShares Core S&P 500 ETF, and this one is hedged. So basically, your investment will not fluctuate with the exchange rate between the US and the Canadian dollar. It's basically a pure play. You're really going to gain, whatever gain you make will be the gain that you make on the S&P 500 performance. You will not be affected by the increases or decreases in the foreign exchange between the US and the Canadian dollars. You'll be sheltered from that. So those are the 3 investments that you can make to follow the S&P 500. So again, if you are not good at picking stocks, you don't have the patience to follow individual companies and track individual stocks, you don't have the time to do that. If you still want to invest and you want to be diversified, diversified at a low cost. These are the 3 S&P 500 ETFs that I would recommend. And I would put that on autopilot. Every paycheck that you get, I would invest immediately, automatically into a direct brokerage account. And with that money, you buy S&P 500 ETF shares. That's what I would do. And guys, if you need help to get set up, get that going, book a one-on-one with me. You'll find a link in the description of this video. Don't delay investing. Start immediately. Doesn't matter what age you are. Get that started. So there you have it. Thanks for watching today, and we'll see you real soon.